All right, guys, the topic of discussion is what is the difference between corporate credit and business credit? All right. There's been a lot of misconceptions about it. I know that when I was trying to build out my business credit, I was confused by this because I would hear a lot of different opinions. And I have a video about bankers lie and be careful who you listen to because it's what you don't know that's hurting you. Okay. But basically, these things are very different. You're going to hear a lot of people talk about do I have to personally guarantee or get business credit without a personal guarantee? What they're referring to is corporate credit, right? True corporate credit, and I want you guys to know this, true corporate credit is going to rely on your EIN number. So it's going to rely on the credit that the business has already established. It will not require a cosigner in most scenarios, which is a personal guarantee, right? So true business credit is going to say you're going to run credit under the business name using the EIN solely and based on the credit that business has established in its lifetime. That is how you'll secure credit with what we call corporate credit, or the corporation acquiring the credit. The corporation would be liable. So if the bills weren't paid, the corporation would be liable, not the individual that owns the company, if that makes sense. Okay? That's what people say about no PG, which is no personal guarantor. Nobody's personally guaranteeing this debt, right? Most business credit that you hear about today will require a personal guarantor. Okay? You're going to have to put down the EIN number for the business, and then you're going to have to fill out who's going to be applying for business credit, what individual is going to be guaranteeing this debt in case it doesn't get paid for. Okay? And whether you're going for a business card with Chase, a business card with American Express, a business card with Wells Fargo, a business card with Bank of America, any business credit card with a credit union, 99.9% of the time, it is going to be business credit and somebody's going to have to guarantee the debt. So what does that mean? You're going to need good credit to guarantee the debt. That's why having good credit matters when you're trying to build business credit, because somebody's got to guarantee the debt. And most of the time it's going to be yourself, because most times people own their own businesses, right? Now you can have other people apply for it too, but in most scenarios, you're going to be the one guaranteeing the debt. And so they're going to look at your credit profile. They're going to see how high your lines are, how often you pay your bills back on time, things like that. So it's imperative that you have good credit to get business credit, because once you have business credit, it's a whole nother world for you. Okay, and I've got an entire playlist about that. Okay, so how do you get corporate credit? Well, it depends on who you ask. There's a company out there called Credit Suite. They help me out a lot as far as information about credit, but they're gonna pitch the whole thing of getting vendor accounts and then working your way up into revolving accounts that don't require. And guys, I'm gonna be completely upfront with you. Unless you're making $2 to $3 million a year with your business, which most businesses aren't doing that are like individually owned, and there are some, but unless you're making $2 to $3 million a year, you're not going to be applying with corporate credit with no guarantor. Okay, that's just how it is, because when the banks lend you money to the business, they want to make sure that the business can handle that. Like they've shown credit, they have the money coming in. They want to make sure that the business can handle that credit. So EIN credit and no personal guarantor is really for the corporations that are producing millions of dollars a year. Okay, I'm just trying to break the falsehoods here, because what I don't want to have happen is have all of you guys go out to these people and try to, pay this money for Quill or Granger and all this thing. It takes money, guys. What they'll do is these vendor accounts, they'll say, yeah, do a net 30, we'll bill you in 30 days and we'll report that to Experian or Dun & Bradstreet or whatever the case is. And guys, that is like the long way and the confusing way of building credit. If you want to build business credit, get business secured credit cards and personally guarantee them. And then once you have good credit, then you can build out business credit by having unsecured business cards that you personally guarantee, right? And now you're good. Now you have a business profile. Now things are reporting to your business credit. You need to also make sure that the cards that you apply for will report to business credit. But if you have to make sure that they report to the credit bureaus, the business credit bureaus. But it's not a game changer if they don't. The bottom line is having these cards not report utilization to the personal credit bureaus, and also making sure that you get high limits with these cards. That's the bottom line. If they report to the business credit bureaus, that's a bonus. And yeah, it's good to have that, but not all of them do. So make sure you check out the playlist. I'll be doing a lot of different business credit card reviews and which ones I would go with. But the bottom line is this whole no personal guarantor is like the biggest myth in the game, in my opinion. In my personal opinion, it is. And it costs people a lot of confusion, a lot of money. People out there getting virtual offices, they're getting Ring Centrals, they're getting all this stuff, and they're paying for all this stuff, trying to navigate these vendors and then go to the next tier of to get that 80 Paydex score. And there's other ways to do it, guys. Just personally guarantor the debt, build up the business credit profile, and you're good. You can skip all of these vendor accounts. Banks don't really care that you have a bunch of vendor accounts. They really don't. You want lending, you want $50,000 of lending, and all you have to show for it is that you have some vendor accounts. Let's be real, okay? People that pitch this dream are pitching products to sell you, in my opinion, okay? Let me know in the comments section what you guys think. And I'm not saying don't get vendor accounts. I'll do videos on vendor accounts. The vendor accounts have their time and place as long as you're going to use them. Like Best Buy has a vendor account, okay? Yeah, that's going to be super helpful for people, right? But Quill isn't for everybody. Granger isn't for everybody. These gas cards are great if you have a trucking business or you're doing rideshare or you're doing Turo, whatever the case is. But guys, just know the difference. That true business credit is going to run off of your EIN, which is called corporate credit. And that will be for not many people out there watching this video. Most people will do the route that I have to do, which is business credit, where you're personally guaranteeing the debt. That is the difference. Unless you're making $2 to $3 million, take the whole personal guarantee out of your mind. There are a couple products out there with no personal guarantor. But here's the thing and I'm going to end this video with this very powerful statement. People, and I'm not judging people that do this, people equate no personal guarantor with taking away financial responsibility from what I've seen. Saying, well, I don't want to personally guarantee the debt. Why not? Are you not going to pay the debt? Are you not going to pay the debt? Right? And so it's almost like an excuse to not pay the debt, or it's an excuse because they have bad credit and to not fix their personal credit. Because to personally guarantee anything, you have to have good credit. Right? So it's almost like a cop-out of saying one of three things. Number one, I'm ignorant and I don't know. So I'm just saying I don't want to personally guarantee the debt because I see my favorite YouTubers do it. That's number one. Number two is, hey, I don't want to be liable if my business goes under. Okay, I understand that. Number three is I don't have good credit, so I can't personally guarantee the debt. That's what they mean by that, in my opinion. Okay, but bottom line is fix your credit. Go to a credit repair company, an ethical one. Fix your credit. You need good credit. Okay? Then build out your business credit. And then learn how to move money around so you don't have to pay interest. And you can acquire assets and build businesses up to the place where, it was a good jump start and now you may not need the credit like you needed it before. Right? So it's all stages. There's levels to this thing. Anyways, guys, I talked enough. Like, comment, subscribe. Tell me your thoughts about business credit and corporate credit. What business cards do you like? What questions do you have? Interact with each other on the comment section. Share this video with somebody that may need to hear it. And subscribe if you haven't, and like the video. Everybody under the sound of my voice, go ahead and just smash that like button for me and help this video go out to people so that way they're not getting hustled and scammed by people trying to sell them things that they don't need. All right, guys. Love you guys. Peace.